Hello and very warm welcome to the sessions on Indian economic current affairs, that is 2 years rapid revision series on the channel of Victory IS. So we will proceed with the topics related to economy. So Indian venture capital, as you can see, Indian venture capital report to 2023 important findings. So venture capital, Brain and Company's annual Indian venture capital report 2023 reveals that venture capital investment in India saw a decrease in deal value of 33% from $38 billion to 25 billion in 2022. The report highlights macroeconomic uncertainty and recessionary fears as the primary drivers of the decrease in deal value. Venture capital, when they are financing, right? So later stage large deals affected the most. The late stage large deals were affected the most by the decrease in deal value. This could be attributed to the cautious approach adopted by investors in light of the economic uncertainty. As a result, investors focused on preserving their capital and were more selective with their investments. Early stage deals continue to see momentum. Late stage is having delays. Late stage is having delayed, is affected the most, but early stage, when we see deals, continue to see more momentum. In contrast, the late stage deals, large deals, early stage deals continue to see momentum in India. This results in a slight expansion in deal volume. The report suggests that investors are doubling down on early stage deal making, as they believe is the best to capture India's growth potential. India outpaced China in terms of new unicorns, right? Unicorns which reached to 1 billion, right? 100 billion for the second year in a row. India outpaced China in terms of new unicorns created. This is a significant achievement for India, and it demonstrates its growing reputation as a hub for entrepreneurship and innovation. Shift to more democratic funding geographically. The report highlights a shift to more democratic funding geographically in India. That means earlier confined to certain cities or states, now it is being spread. This means that the investors are now looking beyond the traditional hubs of Mumbai and Bangalore and are exploring opportunities in other regions of the country as well. SaaS and fintech continue to see momentum in funding. The report suggests that the SaaS, that means software assistance, and fintech continued to see momentum in funding in 2022. This is not surprising, as these sectors have been growing rapidly in recent years and are expected to continue their growth trajectory in the future. If we talk about emerging sectors that gain momentum, is the reports also highlights the emerge of new sectors in India. Sectors such as electric vehicles, agriculture, generative AI, space tech, or climate tech gained momentum in 2022. These sectors are expected to play a significant role in India's future growth story. If we talk about resilient ecosystem to emerge in 2023, despite the challenges faced in 2022, the report predicts that a more resilient ecosystem will emerge in 2023. Investors are expected to continue doubling down on early stage deal making, and wider investor base is likely to participate in India's growth. Now, global unicorn index, right? Global unicorn index, where India stands there. So after US and China, India has retained the third highest number of unicorns in the world. That is from Hurun report in global unicorn. India with 68 unicorns added 14 new unicorns since the pandemic began, and stand behind US, that is 666, and China 316. Top most unicorn in India is Byju's, right? Now having declined 22 billion. Swiggy and Dream 11 both at $8 billion. Offshore unicorn, India has 70, has more than China 32, and both countries produce more offshore unicorns than any other country. About Hurun, if we talk, it is the research, media, and investment business best known for his Hurun Rich List and a ranking of the wealthiest individual in China. CII, that is CII Business Confederation Index. So the Confederation of Indian Industry, CII, has reported that the latest CII Business Confederation Confidence Index for the October-December quarter rebound to its highest reading in almost 2 years, with a value of 67.6. This is an increase from 62.2 in the previous quarter, reflecting optimism around India's position despite rising global uncertainties. The CII stated that the the sharp improvement in the value of the index was due to subsiding these concerns around the impending recession and its impact on the Indian economy. Global uncertainties were there. This Russia-Ukraine war, food inflation was high globally. So those uncertainties. The index is based on the findings of survey over 120 firms of varying size and across all industry sectors and regions of the country. What is the expected growth rate of Indian economy? We have seen expected growth of rate has been changing over the period of time, right? A majority, 70% of the survey respondents feel that the Indian economy will expand in a range of 6.5% to 7.5% in the current financial year, ending March, down from 8.7% in the last fiscal year. The latest first and advanced estimate of GDP for the current fiscal put the GDP print at 7%. What is the impact of policy rate hikes on economic activity? We have already seen a repo rate, etc., right? Nearly half of the respondents have indicated that they have already started feeling the impact of the policy rate hikes by the Reserve Bank of India on the overall economic activity. It is mainly talking about the repo rate. As revealed by the survey, high interest rate have also impinged on private investment levels. Currently, most of the heavy lifting to support growth is being done by public capital expenditure, with private capex playing a supporting role. So public capex means government, capital expenditure by the government. Private capex means it is related to private firms. How is global economy headwinds affecting India's economy? Headwinds, this term was also given in economic survey also. Global headwinds, the kind of obstacles that are there. For example, Russia-Ukraine war, for example, this supply chain disruptions, etc. These are the things. Despite global economic growth witnessing a headwinds due to tightening fiscal conditions and geopolitical tensions, and overwhelming 73% of the survey respondents expect only a moderate impact on the Indian economy. The confidence among respondents stem from the fact that 86% believe that the government's focus on infrastructure is the biggest positive for the Indian economy, followed by improvement in tax collection and good consumption recovery. Will investment cycle recover the next fiscal? That the survey results present an encouraging prognosis, with 90% feeling that their company's investment cycle will recover during the next fiscal. Around 52% expect a recovery during the first half of the next fiscal. About 37% of them foreseeing a pickup in investment by the second half of the year. What is the outlook for profit margins in the October-December quarter? With the resumption of business activity, expectation for the October-December quarter have improved, as majority of the respondents anticipate an increase in sales, that is 60%, and count of new orders, that is 55%, right? Purchase managers index is also this is purchase manager index is also there to look for the kind of industrial growth, right? Expectation in industrial growth. Basically, it is basically by private firms, HSBC, HDFC, etc., and it is measuring the private sector of the industries only. Consequently, the profit outlook for the quarter has strengthened, as nearly half of the respondent, that is 47% of foresee an increase in profit margins, despite the majority of them indicating high input cost. National Manufacturing Innovation Survey, right? Manufacturing is an important sector of the economy. We see a lot of pressure on Indian economy, a lot of pressure of workforce in agriculture. That workforce should migrate from agriculture to maybe manufacturing and other industrial sector as well. So the National Manufacturing Innovation Survey 21-22 summary of policymakers was released recently. The objective of the NMIS study was to evaluate the innovation performance of manufacturing firms in India. The Department of Science and Technology and United Nations Industrial Development Organization UNIDO jointly conducted this survey. The Department of Science and Technology in India has released the National Manufacturing Innovation Survey 21-22 summary of policymakers to enhance the competitiveness of Indian manufacturers and increase in its share in GDP. Increasing share of GDP in manufacturing sector or from manufacturing sector is a very important task that the government is having. Examining the innovation process and outcomes, the NMIS survey examined the innovation process, outcomes and barriers in manufacturing firms and studied the innovation ecosystem that affects innovation outcomes in these firms. The findings offer wide-ranging insights to the enabling activities and barriers to innovation by firms and how states and sectors have performed with respect to the manufacturing firms' ability to produce new products, services, and business processes. Now, benefits of implementing innovation. Over 80% of firms that successfully implemented an innovation in the observation period reported significantly benefit in expanding markets and production and reducing cost. Firm level sectorial system of innovation. Sectorial System of Innovation Survey. The NMIS 21-22 survey consists of two distinct components, namely the first firm level survey and the sectorial system of innovation, right? One is at the firm level and second is at the industry level, right? Sectorial, that is in terms of that particular sector. Total of 8,000 firms. Now these details are not much important, right, among stakeholders in the innovation sector, contributing to strengthening manufacturing value, right? If more research and development is there, then there may be the increased contribution, right? Now about NMIS. When we talk about NMIS, National Manufacturing Innovation Survey 21-22, conducted by Department of Science and Technology in collaboration with the United Nations Industrial Development Organization. This is, the summarized information that is needed or that is important to us. Objective is to evaluate the innovation performance of manufacturing firms in India. Now, what are the components? Number one, firm level survey and sectoral system of innovation, right? In 5 selected sector, that is food and beverages, textile, automotive, pharmaceuticals, and information and communication technology. India's Manufacturing Innovation Index, the firm level survey, captured data related to the process of innovation, access to finance resources and information for the innovation. For firms, these data were then used to compile India Manufacturing Innovation Index covering 28 states and 6 union territories. Follow-up is Department of Science and Technology first National Innovation Survey held in 2011. UNIDO, headquartered in Vienna, that is in Austria, is a specialized agency of the United Nations to promote and accelerate industrial development. India is one of UNIDO's founding member. Status of India's manufacturing sector, if we talk about the Indian manufacturing industry generated 16 to 17% of India's GDP, right? 16 to 17%. The target is 25%. Entire industrial sector, if we talk about entire industrial sector, if we talk about, then entire industrial sector, manufacturing is part of industrial sector, right? Manufacturing is part of industrial sector. If we talk about entire industrial sector, it is somewhere around 29 to 30%, right? 29 to 30%, and is projected to be one of the fastest growing sector. Now, major findings, if we talk about innovation, innovative firms, nearly 25% of India is innovative. Top state in innovation, that is Karnataka, Dadra Nagar and Haveli and Daman and Diu, Telangana and Tamil Nadu. Lowest ranked states is northeastern states, Bihar, Assam, Jharkhand. Lack of finance from external sources as a barrier. Nearly 40% of the firms face this particular issue, that is finance from external sources. Now, triple helix model focus, that is the survey focuses on this model. It refers to the relationship between universities, knowledge-based institutions, that is KBIs, firms, governments, and hybrid organization. If we can establish, for example, the link of curriculum, universities curriculum, or maybe this professional courses like engineering and all, the link of their curriculum with the demand of industry. If we can match, we can have better results. Recommendations of the survey is awareness campaign, innovation example through events, webinars, and media campaigns. Collaboration, that is this triple helix model focus, create a joint R&D program between universities, research institutes, and industry to foster collaboration and sharing of best practices, right? Innovation center, if we talk about, establish innovation center in every state that offer training and funding to MSMEs. If we talk about investment, encourage venture capitalists and angel investor to invest in innovative startups by providing tax incentives and reducing regulatory barriers. If we talk about financing, establish a government-backed loan program that offers low-interest loans on firms for innovative projects. Workforce, if we talk about, promote STEM, science and technology, we have already seen, right? STEM education and provide training program for workers to learn new skills in emerging technologies. If we talk about Industry 4.0 technology, financial assistance to firm to upgrade their manufacturing facilities with digital technologies such as Internet of Things, artificial intelligence, and big data analytics. If we talk about IPR protection in these cases, establish a strong legal framework that protects patents, trademarks, and copyright and provides swift enforcement against infringement. That is important because this research and development requires a lot of effort with respect to a lot of financial investment also, right? And when copyrights are not protected, then many a times we have seen the firms are not motivated to invest in research and development, and we face a lot of this issues related to innovation, right? Because people are not ready to go for investment and research and development. Now, purchasing manager index, just now I was talking about it, purchasing managers index, right? India's manufacturing sector expanded a 3-month high driven by resilience in demand growth and factory orders and easing input cost pressure. For example, when we talk about this purchasing managers index definition, it is a private survey based measure that asks respondents about changes in their perception. So it is expectation, it is based on expectation, right? Perception that they are having of key business variable compared to the previous month. Key business means how much order has been produced, right? What are the backlogs in previous order, etc. Provides information about current and future business condition for decision makers, analysts, and investors. Calculated separately for manufacturing and services sector. Then a composite index is constructed. If we talk about range 0 to 100, score above 50 indicates expansion, below 50 denotes contraction, and 50 indicates no change, right? Expansion means whether the manufacturing sector will expand, contraction means manufacturing sector will contract. And the scale is 0 to 100, 50 means no change, here it is contraction, here it is expansion, right? Period release at the start of every month published by Japanese firm Nikki, but compiled by IHS Market over 40 economies worldwide, right? In India also many private firms also collectively conduct this. Significance widely followed in as an indicator for economic health. A high PMI reading seen as positive, low PMI reading is seen as negative for overall economic performance, right? Now, one detail related to the factories. Tamil Nadu Amendment Bill 2023. Tamil Nadu has performed really well in terms of manufacturing. We have seen the kind of clusters that Tamil Nadu has developed outside the cities like Chennai, etc. For example, the outskirts of Kundrathur, etc. So there they have performed very well because without congesting the traffic, having wide road connectivity from this outskirts of Chennai with Bangalore, etc. So that is where they are having advantage, and in investment in terms of leather industries, etc. The case studies have been given in this economic survey. The Tamil Nadu government has recently passed the Factories Tamil Nadu Amendment Bill 2023 to amend the Factories Act 1948 to provide greater flexibility to manufacturing sector. The proposed amendment suggests, interestingly, a new section of 65A in the Act which will allow factories to have flexible working hours. The bill has raised several concerns among trade unions, and political parties have opposed the move, right? The purpose of this amendment aims to provide greater flexibility to factories by allowing them to have flexible working hours by inserting a new section 65A in this particular act. The proposed change is extended to daily shift of factory workers to 12 hours instead of existing 8 hours in case they opt for 4-day work a week. The total working hours in a week will remain unchanged at 48, right? So total working hours will be 48 only, but if you are opting for only 4 days work, then 12 hours will be there. So 12 hours you can work for 4 days, and it will sum up to 48 hours of the week, right? So section of the Factories Act affected by the amendment, the proposed amendment affects several sections. Now it is not needed, right? Trade union express concerns, Tamil Nadu government's aim, etc. These are not required, right? So these are the issues related to industry that we have discussed so far. Here we end the current updates, not particularly related to industries only. So in many other segments of the economy, we will be there. We will be again making videos on those current affairs we will be discussing here. So stay tuned to the channel of Victory IAS on YouTube, and we can discuss further current affairs as well. Thank you very much. Take care. Bye bye.